Hi again. When we left off in our last video, we finished talking about the direct write-off method to account for bad debts and accounts receivable. And we made it pretty clear that the direct write-off is not acceptable by generally accepted accounting principles. So let's talk about the allowance method. The allowance method is discussed in your textbook on pages 275 through 280. And the allowance method does follow the matching principle and is therefore required by generally accepted accounting principles if bad debts are material. A definition of the matching principle is that we recognize or record an expense when it is incurred and in the same time period that we record the revenue that was earned as a result of the expense. In other words, we record bad debts in the same time period that we record the service or the revenue. We do not wait for an event to happen. Instead, every year, we estimate the amount of bad debt expense in the same time period that we record the revenue from the sales of services or the sales of merchandise. This estimate is referred to as the provision for bad debts and is always made as one of the adjusting journal entries at the end of an accounting period. Always, always, always. I don't care how you calculate the amount of the provision for bad debts. Always debit bad debt expense and credit allowance for doubtful accounts. Debit bad debt expense and credit allowance for doubtful accounts. If you'll notice, this is requiring you to use a brand new account, one that we have not talked about before. The allowance for doubtful accounts is a contra asset account. It attaches itself to accounts receivable and has the opposite normal balance. And accounts receivable are reported net of the allowance for doubtful accounts on the balance sheet. Turn to page 106 of your textbook and look at the balance sheet on that page. Note that the third line down under current assets says accounts receivable net. Net means that the credit balance in the allowance for doubtful accounts has been subtracted from the debit balance of accounts receivable for balance sheet reporting purposes. This estimate is a prediction of the future. If we had a perfect crystal ball and could accurately predict future events, the balance in the allowance for doubtful accounts at the current year end would be the exact balance of all of the accounts receivables for customers who experience an event and whose account actually go bad next year. Let's work through some examples. J-Tech Company had $500,000 of sales during its first year of operations, 20X1. At the end of its first year, $25,000 of credit sales remain uncollected. This is the balance of accounts receivable at the end of the year. Based on the experience of similar businesses, J-Tech estimates that 2,000 of its accounts receivable will be uncollectible. Record the annual provision for bad debts at December 31st, 2021, and post the debits and credits to the T accounts provided. Please pause the video, record that journal entry, post the debits and credits to the T accounts, here, and then come back, start the video again, and check your work. We are recording the provision for bad debts, and always, always, always debit bad debt expense and credit the allowance for doubtful accounts. Therefore, the journal entry is debit bad debt expense $2,000, credit allowance for doubtful accounts $2,000, and when that debit and that credit are posted to the T accounts, it looks like this. December 31st, X1, debit bad debt expense, credit allowance for doubtful accounts. Notice that in this journal entry, we did not try to identify a specific account that we will not collect. Rather, the annual provision is a general estimate of uncollectible amounts at the end of an accounting period. During the next accounting period, events will actually happen and must be recorded as they occur, but at that time we will be able to identify a specific customer whose accounts receivable we cannot collect. Examples. On March 14th, 20X2, JTech receives notice that its customer in Grange took off for Mexico with all of her assets and plans never to come back to the United States. JTech's accounts receivable from in Grange was $650. Record the write-off of in Grange's account due to this event and post to the T accounts. Hint: remember that on December 31st, X1, we recorded enough bad debt expense to hopefully cover the account balances for all events that happen in the following year, X2. We do not write the words bad debt expense in any journal entry under the allowance method unless we are doing the annual provision for bad debts. And that's not what we're doing here. We are simply writing off an account because an event happened. So please pause the video, write your journal entry, post the debits and credits to the T accounts, and then come back, start the video again, and check your work. Did you debit allowance for doubtful accounts and credit accounts receivable in Grange $650? And in posting the $650, the debit on March 14th, 2002 to the allowance for doubtful accounts and credit accounts receivable $650. Another example. On September 5th, 20X2, JTech receives notice that its customer J. Abernathy died without leaving any provisions to pay any of his bills. On September 5th, the balance due from J. Abernathy was $1,350. Record the write-off of J. Abernathy's account due to this event and post to the T accounts. Please pause your video, do that, then come back and check your answer. So we need to debit the allowance for doubtful accounts and credit accounts receivable for J. Abernathy, $1,350. And posted to the T accounts, it looks like this. September 5th, debit allowance for doubtful accounts, $1,350. Credit accounts receivable, $1,350. Another example, on November 2nd, 20X2, JTech receives notice that its customer R. Summer filed for bankruptcy. JTech's accounts receivable from R. Summer was $950 on November 2nd. Record the write-off of R. Summer's account due to this event and post to the T accounts. Go ahead and do that, then come back and check your work. The journal entry is debit allowance for doubtful accounts, credit accounts receivable, R. Summer, for $950. And the posting to the T accounts looks like this. November 2nd, 2002. Debit allowance for doubtful accounts, $950. Credit accounts receivable, $950. As discussed in the direct write-off method above, sometimes, rarely, only once in a blue moon, not very often at all, there is a recovery of a bad debt after it has already been written off. Example, on November 16th, X2, a few months after running off to Mexico, N. Grange decided she didn't like it there after all, and came back to the U.S. and began to pay off all her debts. JTech unexpectedly received a check from N. Grange in the amount of $650. Record the necessary journal entries and post the journal entries to the T account. Hence, 2 journal entries are necessary here. One to set up her accounts receivable again, and the second one to receive the cash. Go ahead and do that. The 2 journal entries required under the allowance method would be a debit to accounts receivable in Grange, $650, and a credit to allowance for doubtful accounts, $650, which is simply reversing this journal entry here. We simply reversed it and set up her accounts receivable again. Then we receive the cash. Debit cash, credit accounts receivable in Grange. And it looks like this when we post it to the T accounts. September 16th, X2, debit accounts receivable, credit allowance for doubtful accounts, and the second journal entry, debit cash, credit accounts receivable. And if we get our balance in the allowance for doubtful accounts account at the end of the year, before our annual provision for bad debt expense for the year X2, you'll see that we have a small debit balance in the account. All of these debits are greater than these 2 credits by $300. It is possible that we could end up with a small credit balance in the account. And the reason for that is that our crystal ball at December 31st, X1 a year ago was not perfect. We underestimated the accounts that actually did go bad during 20X2 by $300. And like I said before, it is possible that we might overestimate and have a small credit balance in the allowance account at the end of the year. That's the end of this video. When we come back, we will talk about how to calculate the allowance.